Massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips rocking and rolling here, 5th of June 2016. No trade calls or recommendations in response to all this stuff. We're here for educational purposes only. So, what's going on, guys? A fairly interesting week coming ahead. So, what I'm going to do now is I'm just going to try and every week I'm going to try and pick 5 charts, so one for each day. And most interesting charts are things we've been talking about. If anything hasn't changed that much, I'm not really going to update the outlook. Now, keep in mind that we've got a fairly busy week in terms of central bank speak. So first of all, on Monday, the main event risk is we've got Yellen speaking. On Tuesday, we've got RBA rate. So that's going to be the main event. On Wednesday, we've got, apart from crude oil inventories, we've got RB&Z rate decision, right? And on Thursday, we've got Draghi speaking, along with U.S. unemployment claims. We've got BOC on the wires, and then on Friday, we've got some lighter data. So, but it's a lot of central bankers on the wires this week. So, what's going on? We talked about asymmetric risk-reward profiles recently, right? And as gold was pressing these highs, everybody's talking about the BlackRock top, all that stuff. We said the asymmetric risk reward for us was clearly to get short there, right? And the range hasn't really changed for us. It's that 1300, 1250, 1200. And we expect that unless we get a clear, some clear outline on what's going on with the next rate hike, et cetera, we'll probably be wheeling and dealing, playing ping pong inside the zone, right? So in the same way we felt the risk reward was to the downside here, when we came back into the 1200, it's just ping pong zone, right? The risk reward was here. Our assumption is that the range is going to hold, and we're looking for a move back in 1250. So right here, as far as we're concerned, there's a lot less edge, right, in the middle of the range, the way we look at the market, the way we try and focus on things. But right now, no change in outlook. Range is still 1300, 1250, 1200. We're in the middle of the range, and we expect the middle of the range to be pivotal for Momo and flows. So that what that would mean is daily closes above bullish, daily closes below bearish. But we think, in terms of primary move, there's a lot less edge. But here, the big question is going to be, right, are we going to be moving through this very, very quickly for a move back up, or is this just a healthy correction and then we're going to test those lows again? The truth lies at mid. Okay, in terms of Kiwi, so we've got a RBA and RB&Z on the wire, so it's going to be interesting to see what happens. We liked the shorts off these highs, and then we were very cautious about this choppy area in the middle with this confluence of the 3 moving averages here on the daily, the 50, the 100, and the 200, right? So not so interested. Right here, as we're going into next week, all of a sudden these highs become quite interesting. So first, we would not be surprised to see the market try and take out as many stops as we can up here, but we would look at these highs as being the bull bear line, right, for the week. And most likely the assumption will have to be that RB&Z does not want a stronger currency. They'll either cut, they'll either try and talk it down. So at base expectation for us, unless proven wrong, is going to be possible highs, but eventually an attempt to move back lower. But we're going to be very interested to see what happens here. And also fairly similar action on the Aussie. Fairly interesting location here on Aussie. We tried to hold this area, which does strong previous support that then acted as resistance, even though in a fairly sloppy manner, right? So going into the week here, again, it looks like we may attract to the upside, but all things being equal, we'd have to expect this to end up lower on the week. So right here, we could easily see a little bit pop higher, but we've got a lot of strong resistance here, and we would expect, unless something crazy comes out of the RBA, RB&Z, we would expect any kinds of rallies to get sold this week. So we'll have to see how these play out. Euro, again, another great example of just filtering out the noise and focusing on the chart. We talked a lot about those 3rd of May swing levels. So we got long, Swissy, short, Euro, etc. across the board. And when these came down, what we talked about, we said, ideally we'd want to see these moves come back down, clip the 200 DMA, close back above. And just respecting this recent move, the asymmetric risk reward here is to try and look for some longs. It doesn't mean it's going to work, but this is your risk and this is your reward, right? If you're trying to go back to the upside of the channel, or even if you're just, as our base assumption for the year, as we've discussed, for a while, that we're going to be, broadly speaking, range bound, clearly that was the risk reward, right? So right here, going into the week, I'd look at these 1340s as a pivotal level. Daily closes above, we'd expect those 1490s to attract. Daily closes below, we'd expect those 1200s to attract. Retest of 1200s, we would expect those to break, and we expect the 1050s to break. So for the 1490s, 11490s, 115s to get clipped, I think it's very, very important for the market to hold daily closes above this level quick at the beginning of the week, okay? Now, reminder, as we always say, it's a bit of a sucker's play to try and fade all these non-farm payrolls, FOMC moves on the day. Usually it's better to just let them do their things, let trapped longs or trapped shorts get out of the market, let weak players get taken out of the market, and after 24 to 48 hours start to look for the fades. That tends to be the most interesting thing. So that hasn't changed for a long time, so really no change as far as we're concerned. And here, in terms of the ES, guess what? We're still stuck at 2100s, right? So our range hasn't changed, 2100s, 2050s, 2000s, right? Big ping pong zone, like this is like the gold, right? 1300 on gold. The way we look at it, 1250 on gold and 1200 on gold, right? That's the way we're looking at it. So what we said at the beginning of last week is watch out that even though the mid-range is the 2050, right? What we said is the first thing it needs to get through is this descending trend line. And you see what's happened. Even though we tried to sell off in the week, buyers are still there, right? Buyers still there supporting it at this trend line. So again, we go back into the week and we're exactly where we started. 2100 pivotal, daily closes above. We'd expect it to try and take out new highs, press towards those targets we already looked at in terms of 123 extensions on the fibs. Daily closes below, we'd expect aggressive tests of this trend line to find buyers, and unless that cracks quickly, right, you'd still expect sideways to upside chop. If that lets go, be very, very careful, because we expect 2050 to print extremely quickly. And at that point, we're back to pivotal inside range, 2050, daily closes above, below, above for a move back higher, below to tag the bottom end of the range, 2000s, okay? So that's pretty much where we stand, guys. As always, I really appreciate all the guys liking and sharing the content last week. Gives me a good idea. People are enjoying it, so keep on doing it. Stay strong and keep on the updates. So thank you so much. Have a great rest of the weekend, wherever you may be, whatever you may be doing, and I'll see you around on Twitter. Talk to you guys soon. Take care. Bye-bye.